Okay, so Tesla stock is doing a top sign today, as it failed miserably in reversing the bearish sentiment. This top sign could trigger the next bearish leg on Tesla stock, dragging us to much lower levels. So far, it feels like the bears are winning this, but there is still time for a bullish retaliation if you ask me. It just won't be easy, and Tesla would have to do the right patterns for that. I will explain in details what Tesla needs to do from here in order to reverse this bearish sentiment and what to expect from here if it keeps crashing. So let's start our multiple time frame analysis and work with a few scenarios. My name is Nathan and you are welcome to the Finance Hydra channel. So first, let's say you are bearish. You believe Tesla is going to drop to lower levels from here. Well, in this scenario, it feels like the odds are in your favor because we are doing a top sign. The trend is already bearish. Tesla is doing lower highs, lower lows. Trading right now, we are trading below the 21 exponential moving average. What's more, the 21 EMA along with the 187, this red line over here, which was a previous support level, and it is the neckline of this head and shoulders chart pattern over here in the daily chart. This red line along with the 21 EMA are both working as resistance levels right now. Therefore, what do we see here? A dual resistance level. If Tesla actually triggers a top sign over here in this area, the next target is the next Fibonacci's retracement at the 50% around $159, $160. In this scenario, it's quite easy to see Tesla dropping to such level, but in my humble opinion, the 61.8% Fibonacci's retracement around 145, 146 is the most important support level on it. Why? Because it is the last retracement over here and it is the earnings gap from January 26. Therefore, we see a dual support level on Tesla right now. And remember, my dear friends, gaps, they usually work as magnets for the price when the trend reverses. We're gonna talk about gaps in a few minutes. But before that, let's take a look at the 1 hour chart. In the 1 hour chart, I do have some good news for the bulls because Tesla right now is at least not bearish. Right now, it feels like we are moving sideways over here, dancing around the 21 EMA. We don't see a crystal clear, amazing bullish reversal, but we have yet to see lower highs, lower lows in the 1 hour chart. Therefore, it feels like Tesla just stopped dropping. But I do agree that if we actually trigger this top sign over here, probably Tesla is going to resume the bearish sentiment and it is going to frustrate this congestion area in the 1 hour chart. Now, if we take a look at the daily chart again, what Tesla needs to do in order to frustrate this bearish sentiment, we gotta break the dual resistance level at 187. We gotta break this red line over here. If Tesla actually does that, well, I see Tesla retesting the next resistance level at $200, this red line over here. In addition to this, this green line, this green line up here, $200, which is the next top level on Tesla stock. Now, if we take a look at options over here, and by the way, if you want to trade options with me, check my anti-fragile newsletter. We are doing very well so far. Take a quick look at my website. The link is in the description of this video. Join the top 5% of traders that can actually make money while beating this market. Now, options wise, Tesla is in a critical situation because if we look at options expiring next week, we see that the $200 is a very important key point. Is the highest call open interest strike. The sentiment is not the best. The put call ratio is at 0.94, which is higher than this week, for instance, but still, it is not that horrible. So if we see a breakout from the dual resistance level at 187, probably Tesla is going to seek the $200 area, seek this call wall over here, if I may say that. So I firmly believe that we might see a midterm rally on Tesla if it actually breaks this dual resistance level over here, if it breaks this ceiling. But honestly, we could go even higher. This is a midterm reading. Long-term speaking, Tesla is trying to do a bottom sign in the weekly chart. And this is quite meaningful, because if Tesla actually materializes a bottom sign in this area, in the weekly chart, maybe this could be the beginning of the next bullish leg on it. So far, of course, there is not a single bullish evidence that Tesla is gonna do that. We are still below the 21 exponential moving average over here in the weekly chart, which is working as a resistance for us right now this week. So the situation is not looking good. But if Tesla actually confirms a bottom sign, if we break the 187, if we break this week's high over here, doing maybe a possible bottom sign above the 38.2% Fibonacci's retracement in the weekly chart, I believe Tesla could fly to much higher levels. So far, it feels like the bears are winning this. So far, the odds are in the favor of the bears. However, if Tesla breaks its main resistance levels over here, I believe we could reverse this bearish sentiment. And do you guys remember this gap over here? I told you guys we are going to talk about gaps right now in this video. So when Tesla reverses the trend, it usually follows the same pattern other mega cap stocks do as well. For instance, Nvidia. Nvidia today, it filled its gap from April 2022, almost 12 months later, when Nvidia was trading near $100, and I told you guys we're gonna seek the 258 again. Many people called me crazy. This is just ridiculous. Nvidia is such a horrible company, overpriced. There is no way in hell it is going to seek the 258. Well, we filled this gap today. Apple follows the same pattern. Right now, if you ask me, we are going to fill this gap over here at 171. Previously, the previous gap was at this yellow square over here. At the moment Apple reversed the sentiment, we just went up to fill this gap before dropping again. If we take a look at other mega cap stocks, they all follow the same pattern. Amazon, in my humble opinion, we are going to try to fill this gap. Previously, it filled this gap over here before dropping again. So when the sentiment reverses, usually gaps work as magnets, and so far there's not a single gap on Tesla above its price that Tesla didn't fill yet, except for one. There's one single gap on Tesla, which is around 262 over here. If Tesla actually finds a bottom level over here, if we actually reverse the trend in the daily chart by breaking its main ceiling over here, long-term speaking, I think Tesla is going to fill this gap at 262. Now you can call me crazy, but be careful. Many people called me crazy in the past. They just disappeared right now. So of course, don't disappear. If you're still watching this video, come on, subscribe to this channel. You probably liked the content. Click on the like button to support me. I'm gonna keep you guys updated every single day on this. So when you need some extra insights, you are always welcome to the Finance Hydra channel. So right now, Tesla is in a critical situation. It feels like it is now or never for this. So it all depends if it is going to trigger the stop sign or if it is going to break the 187 area. Again, I'm gonna keep you guys updated. Subscribe to my newsletters for premium insights and analysis on Tesla, Nvidia, and many other stocks. Subscribe to this channel. I really appreciate your audience, my dear friends. Stay safe. Bye-bye.